What's up, guys? Happy Tuesdays. How's everybody doing? Dun, 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 dun. Dun, 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 dun. Took VIAC Lotto before. Nice. Let's get it. Whoops. So let's take a look at the weather today. Take a look at in the market. PACB has earning. Took some Lotto puts. What is that? I'm not that familiar with that company. What's up, Spindo? What's going on? Alright, so let's see. Today, market was pretty green. Everything was green, almost. Tesla, Microsoft, Apple. Ooh, big move, big move. MasterCard. I actually saw some good news on MasterCard today. They're getting into the crypto space. Very bullish on them. Banks are green. Everybody is green. Charles Schwab's. If you guys are in the algo trades and the algo watch list, Charles Schwab was one of the plays. Very green today. So things are doing good. Just Friday, everything was doom and gloom, doom and gloom, but things have changed today. You know, Moderna was up 6%. Nice move. But oil sector was a scam. Everybody got scammed. I remember you guys were hella bullish on oil on Friday, and I tried to tell you guys, yo, I was like, oil is a scam. And then you guys were like, I'm still bullish. Screw you, 007. I was just messing around. Nvidia is very strong today. Expedia was really strong. I think this week's scam are the travel trades. I think you know how like last Friday I was like, yo, I think this oil run is kind of like very overbought. It's probably gonna have a pullback. I think this week what I see is I think the travel sector, like airlines, Expedia, cruises, I think those guys are gonna be very overbought this week, because people are following into those trades, and I think they're gonna punish people. Whoa, what happened to STZ today? 6% drop. I gotta check that out. I like opportunities from time to time like that. So very interesting. A lot of interesting moves in the market. We play some earnings. Let's check them out. Book a ticket to visit my dad in Florida. Tickets expensive again? Is it? Is it? What's up, RB Nico? You made $82 on crypto. UPST really hoping for good guidance. Love this market for some premium. Your Chinese friend, still bullish on oil? Don't trust her. Oh no! Oh no! Oh no! It's over for Roblox. No! Ugh. GG Roblox. GG Nancy Pelosi. GG everybody that lotto Roblox today. It's over. Oh dang, what a scam. I was just thinking into close too. I was just thinking into market close. I was like, man, Roblox had such a run today. It's gonna probably scam us. Look at that. A scam. Alright, let's look at what they said though. Q4 earnings per share is 25 cents, negative 25 cents, as opposed to negative 14 cents. Booking is 770 million as opposed to 763 million. This is a 16.6% increase compared to losses from the same period last year. Barely beat analyst estimate. Q4 average daily users were 49.5 million, up 33% year over year. Hours engaged were up 10.8 billion, up 28% year over year. Revenue increase 83%, they said. Net cash provided by operating activities was 122. They have a free cash flow. Oh, their debt to equity is actually pretty clean. I'm a little surprised by that. Booking increased 20%. Data is good. Compared to a year ago, stock was trading around $62, so it's trading about the same price again. It's trading around the same price. So let's look at the guidance. Let's see if we can catch a guidance. Wow, UPST actually beat. What a big move for UPST. I didn't get a chance to catch the Biden speech. Yo, these data is mad good for Roblox. January 22 key metrics. Revenue was between 200 to 206, up 64% year over year. Hold up. Are they saying just for the month of January, they already pulled 200 mil? Actually, that's lower. That's not that good. Comparing this metric for 1 month, daily active user up 32%. Hours engaged 26%, supposed to 28%. Bookings. I can see why this is actually not bullish data. Why is January 2022 key metrics estimate lower than last year's, in a sense? Like gaming less, like slower than last year's. They just signed like a bunch of like deals and stuff. I can see why. I can see why people don't like it. That people don't like it as much. I think $60 is still a pretty reasonable price. You know, knowing that Nancy like bought it when it was like 80s, right? So I think 60 is still a pretty good area. If you like, if you like it and you're looking for a market to be bullish and things like that. I mean, on one side, they do have a lot of cash on hand as a company. They have a lot of assets. Their liability is lower, and apparently they have no long term debt. So you know, so on that bright side, at least the company has money, right? On the other side, the company hasn't turned profitability yet. So that's why the EPS is a red, right? That means it's negative. So the company hasn't like achieved profitability at this point yet. And you know, if they haven't achieved profitability yet, after all this time, when would they achieve profitability? Because Roblox has been around for a long, long time. You know, so there's also that, right? Food for thought. But I mean, I like it. I think I'm not sure what else they're gonna do, but I think they could potentially trade upwards. I don't like them as a 10-year investment, but you know, I wouldn't invest in them for 5 to 10 years. But I do think they could be a short-term bounce, you know, investment like short-term run. Oof. I see why UPST. They just announced a buyback. Anytime a company announces buyback is so crazy it's unstoppable, man. Because if a company is doing a buyback, only 4%, only 4.6%. But usually when a company does a buyback, that just means like they're gonna kill all the short sellers. They're gonna be like, you short, I sell it to you. That's true, Nasty Nate. That's true. Most of them are being punished in this 1,000% increase in earnings per share, 89 cents as opposed to 51 cents. Compared to last year, it was only at 7 cents. So that's pretty big, 10x there. This is 251% increase in sales or revenue compared to the same period last year. So this quarter they made about 305 million, whereas last quarter they made only 86 million. So that's pretty big increase. And if their earnings per share went up, that means their overall profit went up too. The profitability is there. That's pretty good. I'm actually a little surprised by that. Actually a little surprised by that. I'm not gonna lie. So this quarter kind of almost justify like how the company was, because I mean you had a $30 company and they're pulling this phenomenal $30 company. It's at $130 right now. That's 10x. That's 10x. I would say it's pretty reasonable. But when it got to $400 though, I didn't believe in the company at that point. Like, or anywhere above 200, I didn't believe it. But hey, $30 to like 130, that's okay. That's okay, man. But I wonder what the guidance is though. Can they continue to keep this momentum going? Let me see. So they said next quarter. Next quarter. Stop moving. Next quarter, they said they're gonna make about 295 to 305. So that's gonna be pretty big. Kind of in line with this quarter. So momentum is there. They could keep it going. For the full year, they're looking to pull about 1.4. So 1.4 divided by like 4 quarters, looking at 350 mil. Okay, okay. So they're gonna have some slower quarters, but they're gonna have a bigger quarter too. So you guys, I like that, PX. You're right, man. It is pretty crazy. It is much better than Affirm, because I don't think Affirm was in profitability. This is actually in profitability. However, though, due to the current data, the price of sale is still extremely. The price of sale hasn't caught up yet. It's trading at 13x, but these datas are usually like a quarter behind. So once the data gets updated, I would like to be interesting to see how the price of the stock is trading compared to sales and stuff like that. I mean, you could probably do the math there too. That's true. Good stuff. You hate Affirm? Why? Oh my gosh. This guy. He's trying to unload, man. My boy RB Nico here. He's trying to unload the Metaverse ETF. So PX1, how come you hate Affirm, man? Why the hate? That's true. I don't like the idea as well. I think it's getting too crazy. I mean, I don't like the idea to a certain extent as a company, right? Like, I think it's great for consumers, but I don't think it's good for the company. Doesn't the firm take on the risk of the customer paying them back later? Yo, I'm actually not sure about this. I think they actually, if I were them, I would probably sell that risk to somebody else. No, if I were them, I would sell that risk to somebody else. So I think they probably already are. I didn't look hard enough into it, but I think they probably already sold that risk to somebody else. They probably had to take some initial risks and then they sold it off later on. But I actually think it's good for consumers, you know, in a sense. Like, actually, I mean, I think it's good for consumers as credit cards are good for consumers. So if you're one of those people that thinks that credit card is bad for consumers, then obviously this will be bad for consumers. But if you can take advantage of credit cards and you think credit cards are good for consumers, then this is, you know, reasonably good for consumers. But at the end of the day, it all depends on whether the consumer is disciplined at using credit at the or and using and taking advantage of these credit facilities or not. Um, in this case, it would be like in this case, I would probably say 80+%, probably like 80% of the consumers aren't good at utilizing credit properly. So it's probably bad for majority of the people, I guess. But I did make like a big purchase one time. There was one time I did like I think like a few years back before our firm even got like big like now. Um, I did make a big purchase on a jewelry like a piece a while back and like it was too much where at that time I couldn't charge it on my credit card, so I was able to charge it on a firm and like for almost no interest I think. So it was a pretty good deal. And then I think I utilized my credit card to pay a firm too or something like that. It was really good for me. I have credit cards and I get all kind of perks for paying my balance in the month. Exactly, man. This is what I'm talking about. Like this is what I mean when you can use it properly. But would I invest in a firm long term, 10-year wise? Hell no. Hell no, man. I would not. All these guys do, honestly. All of them do. Let's see. How did Airbnb do today? Did we have a big move? Major move. I forgot Airbnb was reporting today. Dang. I was kind of expecting Airbnb to do well because Marriott did well today, so we should have kind of played it. Let me see, where could Airbnb go? Because in a way, like Marriott is part of like the you know the travel sector and things like that. Airbnb was at a resistance today, so already had a big run. Um, at 189. What's next? What's next for Airbnb? What's next, boys? Downward slope trajectory. Maybe the 200s, I guess, at this point. Go to 200s, trap everybody, and then come back down. Give everyone that triple top, baby. Triple top. Triple top death. Make it happen, Airbnb. Make it happen. Show me the way. true. That is true. But honestly, actually, I shouldn't be pushing credit cards that much because I realize that a lot of people actually don't utilize it properly and they spend and like Nastiness said they do spend more than they should have and if they have no self-control they don't know how to use it well they shouldn't be like don't get ahead of yourself, put yourself in a death cycle, man. You work for Amex, nice. So let me pull up the Airbnb. What? You know what Airbnb should do? Stock split. Stock split. Alright, let's see how good their data is. Q4 2021. Full year 2021. So they're doing pretty good, 56% year over year. But I mean, it's hard. Like if you're comparing year over year to to 2020, it's not much, right? It's easier to beat that. So I appreciate them for actually putting the 2-year comparison here. So this is this year's numbers, 300 million plus, right? Nights and experience book. But they say on a 2-year basis compared to 2019 before COVID, this is an 8% decrease. Which what that means is that like economy or they haven't fully recovered to that growth that they had seen in 2019, right? So that's pretty cool there. However, this data is pretty good. So even though the night book hasn't achieved back to that popular level of 2019, they did make more money. I mean, the booking apparently did go higher than 2019, so that's something that's good. So, and that drove into the revenue, because that's really the only number I care about when I'm thinking about the company long term and things like that. So the revenue compared to 2019 exceeded, this year's number exceeded 2019's level by 25% higher. So that's good. Net loss is better as well. So net loss is at 352 compared to 674. So they haven't hit the profitability. Well, they said they hit profitability this quarter. Apparently, this is the first quarter of profitability, so that could be big for the company. But they lost a buttload of money in 2020. Look at that, man. 4.6 billion. How did they lose so much money? What happened? Didn't the Airbnb get more competitors now? Ravi, I agree, man. I buy it too. Let's do it. I will probably wait for things to settle. I mean, if we get under $60, I will probably pick up a leap. I'll probably pick up that same leap that Nancy picked up, you know? And we'll see if like Roblox will get to like $100 by like 2024. Because I think Nancy Pelosi picked up $110 calls for 2024 for Roblox. So we'll see, you know? But at the same time, I actually didn't like Roblox when they first IPO because when I did the math on them, they were extremely overvalued at the IPO price. And the only reason I started liking Roblox was because, and I always hated it too. I always shat on the graphic because I see kids playing and things like that. It's just really, really ugly. But I did like them after the fact that a lot of big companies started cutting these crazy deals um, just to like, be on there and stuff and advertise it to kids. So initially, when I first saw Roblox, you know, as a as a company that IPO, I didn't think there was a potential for them to make money or anything like that. But then, once they started doing the advertisement thing, like remember they started advertising with Chipotle, they started advertising with Nike and all these other major companies. I think that's genius because now they're not just a, you know, gaming platform for little kids. Um, well, in that part, now they have two revenue, you know, I think they have two ways of making revenue, right? One way of making revenue is advertising platform. They're beginning as an advertising platform for these major companies. And then the other way of revenue, which, a lot of boomers have no clue about, is that they they you make people make games on there, right? You have a lot of YouTubers, a lot of other, creators that make games on there, and they sell that game for money, and then Roblox keeps a big part of that commission that these people sell games for. And the thing about kids is that, kids have no idea how expensive or how unreasonable something is because their minds can't comprehend that paying $20 or $100 for a game doesn't make sense, right? So they'll once they get their hands on parents' credit card, bam, that's it. They'll do it. So that's the reason behind like why I kind of started to like them once I saw their advertising platform. They pay hosts during COVID. Damn, really? And like how what happened? Did they just like pay the host for people that had cancel, or they just like pay like most of the hosts a big chunk of money? I know it was a crazy earnings, 10x that quarter. I'm still in GGPI. I still have some lottos. I'm waiting for the merger to happen. Did they say when the merger is happening yet? We're seeing a lot of sweeps lately. Did anybody see the commercial? I didn't see the commercial, man. Was it just that 15-second commercial? Because I didn't see the commercial during the game. Everything is overvalued. I think everything is overvalued in this market. Monster. So we're looking at Airbnb earnings right now. So I really like the data so far. The company just became profitable for the quarter, which is very, very big. Anytime when the company reaches profitability, oh man, is nice. My man. Hmm. Hmm. I wasn't too crazy about the white background. The message was good. The next day on CNBC, it was mentioned as the #1 Super Bowl ad. Really? Wow. I wonder how much they pay for that ad. They probably like had to pay a marketing agency to do like analysis on what everybody's favorite war was. Probably thought everybody were saying no this year or last year. So they said that Airbnb said that 2021 they did great because people aren't just traveling on Airbnb, they're living on Airbnb. And saying like people just don't care about variants and surges anymore. Like so be it, people said. Guests are discovering thousands of small towns and rural communities on Airbnb. That's where it is, man. Yo, if you're gonna get on Airbnb, right? If you're gonna go to Airbnb, please do so in a small town or some small community. Don't do it in New York, man. Don't scam yourself. Don't play yourself, bro. Don't be a bozo. Don't book an Airbnb in San Fran. Don't book an Airbnb in New York. Don't play yourself. That's true. Only book Airbnb if you have somebody that can cook and if you guys are not planning to do it. And you just don't want privacy. Or if they have a pool table. Or a pool. Oh wow, they're unlocking some new things. Where is this? This is Tennessee? Yo, this looks like Asia, dude. Tennessee? Yo, is this how Tennessee really looked like? Nah, this can't be Tennessee. This is definitely Asia, bro. Look at that banana plant. These people are probably just from Tennessee. Any update thoughts on the market? Oh yeah, we'll take a look at the market in a little bit. I got you guys. Yeah, hotel is pretty much cheaper. Nvidia's tomorrow. Hold on, Tennessee really looks like this? This looks hella old, man. It's like, this looks like some coconut tree. This is like some banana tree. And then, like, look at the row, man. Doesn't even look that clean. Doesn't look that clear. It's like so old. It, like, for somebody in New York, like me, I can't see this. I can't imagine America being like this. And then like this design looks kind of old school a little bit with this fence kind of. It looks so old, man. Isn't Tennessee pretty like getting pretty modern? Yeah, man. Look like South America or Southeast Asia or something. It looks like 1900s, bro. Like 1920s design, that wooden fencing thingy. This guy's like, I live in Tennessee. That's not Tennessee. Hold up. Let me really look up the place though. Airbnb coming back down a little bit. Would like to see it hit that $200 area though. Yeah, man, look at this. Look at this. Man, nice. Is this casino on the boat? Look at this. No way, yo. Nah, no way. Alright. What other earnings do we got? Oh, Lazy Boy also reported today. Solo Edge reported huge pump and dump. Pretty mixed result there. Let me see if they put anything interesting. No buyback, nothing. Where's Lazy Boy? Right here. Lazy Boy dropped 8%, 36 to 33. Stock split. Fiscal 22 third quarter compared to 2021. Sales increased 22%. Retail segment posted record sales and operating profit. Yeah, everybody getting a Lazy Boy. The income is good. 32 million returned to shareholders. 2% increase. Wholesale segment is good. Wow, Joybird is doing really good. Demand trend strong. Backlog will support strengthening delivery sales as we increase capacity over time. Near-term production gain will be slower than previously expected. Supply chain issues, especially their higher-end products. So they think Q4 is going to be flat, kind of like this quarter. No buyback or stock split. Trending a little bit below last year's price, also below the 2-year price at this point. So it might be an interesting buying opportunity soon. I mean, P to S, price to sale, is pretty good. Price to earnings are pretty reasonable. Starting to get close to value territory. Cash on hand, liability and asset, debt to equity isn't that bad. Somebody from the company just bought some shares recently. I like it. See if they can pull back a little bit. Let me find the chart for the alert. I think it's a buy, actually. I think at this range is a pretty interesting buy. Because I don't think supply chain issues or anything like that is gonna affect them much. So they've been missing the earnings a little bit. Let me add that to the list. All right, let me catch up on comments. Take a look at QSR. I got you, buddy. You know I like QSR, Popeyes. QSR reported this morning. So QSR had a pretty good beat. 74 cents as opposed to 70 cents. Sales is 1.55 billion as opposed to 1.5. 39% increase compared to the same period last year, and 13% increase in sales compared to last year's. So those are pretty good numbers. You know, trading at very reasonable discount price compared to a year ago. The company was trading around $58. It went as high as 68.70s. Right now it's trading at 59 right now. Comparing last year's number is actually, you know, a little bit harder for this company than any other company because they're a food company, so they actually perform pretty well, kind of like Chick-Fil-A and stuff. Fourth quarter sales system Y grew 14%. Comparable sales doing pretty good. Digital sales up 65%. Very good, representing 30% of their sales. So nowhere near Chipotle's level of 60%, but hey, doing good. They just started releasing some of their apps. They released the app for Tim Horton and Disney, and not Disney, and Burger King. Their Popeye apps as well, but all the apps kind of suck though, man. It's horrible. So they could improve. Oh my god, they acquire somebody. They acquired Firehouse Subs. Anybody know what Firehouse Sub is? Is this good? Bad? Apparently they're... Oh. Apparently they're like... in the East Coast. Okay. Apparently Firehouse Sub is in the East Coast. So if you guys ate at Firehouse Subs and you like it, you like it, you're like, yum yum, I could invest in this company. You know what to buy, QSR. Or if you're in Canada, QSP. They're paying some dividend. Doing good. Doing good. Restaurant is growing. So this TH is Tim Horton. BK is probably Burger King. PLK is Popeyes, I guess. And then Firehouse Subs. So 12 months comparable data. Sales growth. So last year there were sales decline. This year sales growth. Popeye has definitely slowed down. So Popeye last year was carrying the damn company. Popeye's last year was growing at 17%, while Burger King and Tim Horton was declining pretty hard. But it looks like Burger King is coming back, and so is Tim Horton a little bit. Popeye is slowing down in terms of growth, though. They say Burger King accounts for most of their sales? What? I didn't know that. Wow, they have 19,000 Burger Kings? Damn, I think we have only like 1 or 2 Burger King in New York and they suck. It was reasonably decent data. I like it, man, RB. You catch up on the comments. Nvidia keeps chugging after hours. Upstart going crazy? Yes, sir, Sonny. Let's get in the south. Firehouses, whatever. Oh, they focus on making hot sandwiches? Like Potbelly and stuff? They bake their subs. My wife loves a slightly upgraded version of Subways. Oh. Oh, you guys are seeing a lot of Popeyes out there? Oh, snap! No, you didn't, Kip. Damn, you guys really liking that, huh? Did you know I looked into like about opening a Chick-fil-A in New York City, and I think it's only like $50,000 to open a Chick-fil-A. Chick-fil-A is one of the cheapest restaurant that you could potentially open, believe it or not. But I was sitting there, I was like, yo, Chick-fil-A is so popular on TikTok. Why isn't like why isn't anybody opening like a lot of Chick-fil-A's in New York City? But everybody is opening like massive amount of Popeyes, right? So believe it or not, in order to you can't really own a Chick-fil-A um because they don't really like do franchise. So the way it works is that you can be like an operator, but for some reason I don't you don't like they don't let you own it or whatever. And then if you do, you have to agree to work for them for like a long time, right? And like you can like for New York or something, you can only work for them as like a manager or something like that, and you have to work for them for a long time. And then um, in addition to that, you also have to I think you have to be Christian, and you have to because I looked into this like a year ago. I was sitting here, I was wondering that, man. Um, and you have to be Christian, man. So you have to you know you have to prove that and everything. So that's gonna be so that this is pretty interesting that they have those requirements. And I was like, you know what? I'm not really Christian, but I might qualify because I help Christian network and things like that. So like maybe they can sponsor me, say I am Christian. Be like I'll be a fraud though. Oh, $10,000 franchise fee? Yeah, it's hella cheap. It's dirt cheap. Anybody can do it. Anybody can do it, man. Damn. Really? Fake Christian. Yeah, they pay for the land, the construction, equipment, everything. Yeah, no lie. I seriously looked into it last year because I didn't know what to do at that time. I don't know, bro. I mean, I could get a certificate from the network that I helped out. I don't know. I get the pastors to say, "Hey, this guy, he's a Christian. 007 Wall Street Christian." I'm sure they have a good reason for that, honestly. Oh man, it's probably crazy hours though. Probably make hella money, but probably crazy hours. Oh wow, Chick-fil-A chartered the Royal Caribbean Oasis ship for all the employees in early 2020. No alcohol allowed. Yo, that's actually pretty cool, man. That's pretty cool. Get to go on a cruise ship, yo. I mean, I guess all the Chick-fil-A owners are probably pretty old too, so they love cruises, man. All makes perfect sense. What if my name was Christian? Wait, hold up. Is there anybody named Christian in the Bible though? I feel like you gotta have one of those super Christian name, man. They look at my name and they're like, hold up. I know your name is not Christian, man. You're probably Catholic, if anything. Whoa! This My man says, I looked into this. The average owner of a Chick-fil-A makes 200K a year. They require that you are an active owner and not just an investor. They also do not support LGBTQIA community. Damn, 200K a year though. 60 hours a week for managing the store. I guess that makes sense. I mean, like 200K 200K a year may sound like a lot, but 60 hours a week is also a lot. Typical manager pulls about 48 hours, 40 to 48, but 60 hours is getting pretty crazy. You almost have no life at that point. I've done the manager grind before. 3-month interview process. Oh, that's normal, dude. Most franchise or most like S&P 500 companies have a pretty long interview process, especially the like especially I'm not talking about tech and stuff. I'm talking about like like these like franchise company and things like that. They usually have a very long process. Is natural. Trolls. I don't know. Why don't you tell me what your name means, RP Nickel? So my name is Joseph, so I sound like his father, so I get father in. That's true, it is. $250 Starlink user terminals. Oh snap! Go to one of those Native American areas. They'll send you one, buddy. Wow, really? Does Chick-Fil-A have a stock? Nah, they don't have a stock. They don't have a stock. But Dutch Bros does. We can invest in that. I see why everybody's bullish. Oh yeah, I know about that. Let's open a Dutch Bro in Florida. Bring that good West Coast vibe. It's worth it, man. The money you pay will pay you back. Calls on Doughboy for Dutch Bros owner. Yo, what's up? What's up, yet world? All right, let's check out let's check out that spy chart. One of you guys asked earlier. Spy. I have this alert. I have alert on oil that says die. It closes like every day around 5. So oil futures closes at 5 p.m. instead of 4 p.m. Right? So when it closed today, it closed above the chart. So it's like die oil die. You know me, man. I was hella bearish on oil, despite all you guys being hella bullish. Because of the trend line, man. Gotta short it, yo. You gotta do it. You gotta short it. How could you not? I mean, look at it. Every time it hit the top here, it died, right? Every time it hit the top, it died. Same here. Every time it hit the top, it died. So, die. I want to get payout, yo. I'm taking it all the way down to $80. Forget about it. What's up, Beefy? Yo, don't worry, man. Just liquidate the house, bro. Take a loan. Ha- Actually, I have an idea. I have a better idea. Have somebody else take a loan, give you that money, right? They give you that money so that because you need a high net worth, right, to open these places too. So they'll require you to have like 500K net worth as well. So you have somebody else take a big loan, and then they take that loan and then you give it to you so that it looks like you have a huge liquid cash flow, and then open it and then grind. Have everybody working at you, your mother, your brother, your wife, your son, your dogs, everybody working there. Make that grind. Honestly, as far as oil goes, I don't know where everybody's getting this $100 number from, bro. I have no clue. I have no clue, man. But I do know one thing. I do know this that that um that like everybody everybody uses fuel, right? So if we think inflation number is really high, if we think the inflation data right now is signaling like super inflation, and the government wants to control inflation down to 2%, then they're gonna do something about oil, man. They're gonna take care of this oil situation and make it cheaper, because I mean the last few years, right? You guys were paying like $50, right? $50. It got as high as like 80, but $50, right? Like I don't know how much you guys are paying for gas right now, but imagine paying double the price of the gas that you were paying. Like that's 100% increase, man. That's a big increase, 100%. Like we're not even talking about 7% inflation at this point. We're talking about 100%, right? So you guys are paying like double the price that you guys are paying for gas for the cars, right? Like let's say last year, I don't know about you guys, but let's say it cost me like $35 to fill up the tank, right? And now suddenly it's costing you guys $70 to fill up a tank. We're just talking about sedan, right? I'm not even talking about like a truck or like one of the big cars. If it costs you like $35 to fill up a tank, and now you suddenly have to cost $70 to fill up a tank, that's 100% increase, and that's a week on a 52-week basis. That's a lot of money, man. Look, say 35 times 52 weeks, right? That's 1,800 times that number by two. That's what you're paying now. That's gonna take a hit. So they can't let it go to 100, man. 100 is too crazy. And I do know this other thing. I know that every time oil gets out of control, I mean, if it goes to 100, so be it. Do it, man. I'm not afraid of it, oil going to 100. Because you know what I'll do if oil goes to 100? I'll short the whole market. I'll kill the market. I wish death pound the market, man, at that point. Because if oil goes to 100, dude, it'll be like this. It'll be like in 2008 when it got so out of control. It just had this omega run, and then the whole market crashed so hard that people went to live in a cardboard. So if you guys want to see oil to 100 plus, so be it. I'm ready to see people live in a cardboard. I don't know about you guys. I'm ready. I'm ready, yo. I want to see people playing the metaverse in a cardboard box in front of Starbucks. Cardboard box with heptic suit. That's right. But yeah, kind of bearish on oil. As you can see, as far as the market, let's take a look at the market. We're looking at the futures S&P 500. The reason I like to look at the futures because it provides a little bit clearer picture. This is the range that we were chopping at for a while the night before, and so we're looking at the 10-minute chart right now. So yesterday, we got the war news on Friday. They're like, oh my God, Russia's gonna invade. Russia said they are gonna invade, blah, blah, blah. Boom, the market died. you know, and then the market dies some more, right? And then throughout the night yesterday, throughout, like, you know, talking about midnight to morning before market open, it was chopping this range, couldn't break through that resistance here. So yesterday was a really easy day. You know, we tested that resistance, came back down, tested again, came back down. So pretty easy play there. And then midnight or 3 a.m. when European open, apparently they heard the news before we did. Um, Now suddenly they said, "Oh, guess what? You know, Russia was just running drills. They weren't really gonna attack Ukraine. Blah blah blah, and all that thing." And suddenly market is really bullish now, right? Things are moving up. But look at where we moved up to. We're also chopping at this very interesting range where it was somewhere where we found support at last week. Um, so this is a pretty interesting area. I would say this is a pretty strong supply and demand zone. So looking at over here, I think we're at a really interesting area where we're either gonna come back down again, right, or we're gonna move back up. But at least now, if we come back down again, we'll be okay. So I'm now moving to a daily chart. We'll go to SPX, right? So now we're in the middle of the range here. We're literally in the middle of the range. There's two things you can do. You could play a strangle. You could play both sides. Where if we come back, we're gonna come back to the 450 levels, right? And we could potentially come back higher. If all is well, economy doing really good and so on, and market gets extremely bullish, we could potentially come back higher. Other case is we can also come back further down. But now, at least without the whole, you know, Russia invading Ukraine, World War III, and the loose, the breakout, at least we know that if we do come back to this range over here, 42, 4220s, right, 422s, at least we know that this could potentially be a bottom. Whereas before, if the war was gonna break out, yo, we don't know if that was gonna be a bottom because that could be a black swan event. You know what I mean? So that's the market outlook now. What do you guys think? How do you feel about that? Hold up, what? I heard somewhere in Cali, talking about Cali, that the government pays you while you're homeless, something like $600 a month. Dang, that's good money. They pay some amount. Wait, who's on the extra account? How'd you guys know this? Do you think Fed speaking tomorrow will cause a dip? I think it's possible. I think it's quite possible. You know, if the Fed's on tomorrow, they're going to, because keep in mind, right? The reason we've been dropping is because interest rate, CPI, and things like that as well. So if the Feds are speaking, that could potentially drop it too. You know, because they will, if the Fed speak, they will say, hey, you know, we're gonna follow through with the interest rate decision. We might raise that 0.50 basis point, and that could potentially take us down here. And if we go down to this range, you know, believe it or not, guys, it's actually really, really bullish. Um, I know it sounds a little crazy. I know it sounds a little crazy right now, but it's actually really, 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 really bullish that we come back down to this range than going up from here. Because if we come back down, if we're coming back down to this double bottom setup, right, it's gonna set up a really, really nice move. You know, look at this. Almost every double bottom pattern has set up to be a higher high. You know, same thing here almost, right? Almost same thing here. Higher highs. So almost any time we get a nice double bottom setup is really, really good. So I would love for us to get it, man. I would really, really like it. I mean, even August of 2020, man. Shoot. See how great that setup is? It's actually a really good thing. You want that. We want that as market participants, as you know, as traders. We want that. Look at that, man. Sheesh. Dang. Look at these. I just drew 1, 2, 3. Oh, maybe I can even draw one here, man. 4, 5, 6. Yo, the last 6 times this happened, it was really, really good. It's really, really good, man. It's almost as good as the endorphins you get after Valentine's Day. Do we have a double bottom? I guess, yeah, you're right. If we like angle it like this, yeah, technically, yeah. You're right. We technically could have one. That's true. Because most of the higher double bottoms are like that. You're right. I'm just being greedy, man. This is the way for investing. We already have a double bottom. Yeah, we gotta look for more value stocks. Who is this Jeremy guy? Tell me more. You know. If you know, you know. You sold SE just now? You sold it recently? Yo, if you sold it recently, it's probably gonna go up. The market gonna play you guys. Alright, man. I think I'm gonna end it here. Gotta run. It's 5. We'll be back here. We'll be back tomorrow to hang out, and we'll see how Nvidia's earnings tomorrow is gonna be. That's gonna be a very interesting one. Nvidia tomorrow. We got Cisco. We got Shopify in the morning. Wingstop, Hilton's. The Trade Desk, one of my other favorite companies. A lot of interesting stuff tomorrow. DoorDash, AMAT, AIG, Super Boomer Company. Hyatt is also reporting tomorrow. Yo, I used to think that Hyatt and Hilton were the same company, but I guess they weren't. Then TripAdvisors, Equinix. So a lot of good stuff. A lot of interesting earnings this week. Gotta gamble more money, man. This is gonna be the week. Nvidia 300. Yo, historically, Nvidia has never failed. Nvidia has never, like, the last 4 quarters, Nvidia has been really, really great. But yeah, I think Nvidia can drive the market tomorrow because it's such a big, like, stock. It could drive the tech sector, and it will drive the whole semiconductor sector. If you look at SMH, SOX, SOXL, whatever, all those like semiconductor ETF, they drive them every earnings. They make the move. But yeah. Thank you for stopping by, guys, and hanging out. We'll see you next time, man. Peace.